And joining us on the investment strategy is investment mentor Julian Tarrobago. So good to have you back on, and on this very special day where investment strategies probably want to change after what they've heard.
Always a pleasure to be
How
here.
has yours changed?
How has mine changed? Well, let's just say after yesterday's sauna, the clouds haven't cleared. It was very well delivered. You've got school connectivity, bridges being rebuilt or built, and rice at 20 pesos is apparently becoming more than aspirational. But there's a key element that was, I think the theme was that there's a glaring opportunity for improvement in terms of execution. And because of that, my outlook remains a bit overcast. When visibility is dim or not very, the roadmap was, for me, I would have wanted more clarity in terms of the road ahead. So when visibility is dim or not so clear, I go to my great score. We talked about it in the past. G for GDP growth. This is how I look at the market. So G for GDP growth, the direction of interest rates, or R. E for earnings growth. T for trends in liquidity and adverse risks. So great. And right now it's 2 out of 5. So I'm keeping that underweight, cautious stance, which implies or prescribes a more defensive stance on Philippine stocks.
So is that what you're also prescribing your students? I mean, with your investment class going on, it started like at the first half or first quarter of this year, before the Liberation Day tariffs. So how are you now advising them if there's this cloud of an overhang still?
Well, what I'm advising them is stick to your process. So the system prescribes an underweight based on the great score. That's 2 out of 5. So that means don't bet all in on Philippine stocks. Leave a lot of dry powder, but stay in certain scattered opportunities, not rain showers, but opportunities like consumer, Jollibee, Pure Gold, where you have growth and value at the same time. And I think the transformation's been quite encouraging so far for the students. They're learning how to invest with a system, something that filters out the noise, so they're able to invest with more confidence, with clarity and consistency, not by chasing stock tips, but by filtering out the noise. And
how were they taken to MEPA though? Did they consider that as noise, or are they taking that into consideration?
The what?
MEPA.
MEPA
Act.
MEPA.
Lower transaction taxes. Does that encourage them to invest a lot more?
Yeah, absolutely. We talked about this in the last time. So it's from 0.6 to 0.1. So that's definitely encouraging. However, that is one element out of in the grand scheme of things, we're still an underweight because of the factors I mentioned earlier. But at least now they can invest with more clarity. Confusion has turned into control in terms of investing, and the system really helps them invest with confidence. And I'm seeing, like for my learners, fathers and child, or parent and child, and young professionals, even young very learners, building their own system for investing, and that's what we help them with.
Well, I'm thinking they'd want to keep a little bit more cash right now because. So absolutely, what percentage of the portfolio? If you're underweight stocks, what is the rest of the portfolio?
If you're a moderate investor, it depends on if you're a conservative, a moderate, or an aggressive investor. If you're a moderate investor, wherein your neutral allocation would be 50-50 in stocks and fixed income, they would definitely be below the neutral 50% weight in stocks. So if your allocation would ordinarily be under stable conditions, 50% in equities, it would be 30 thereabouts percent. So leave some dry powder to invest going towards your neutral allocation when the outlook, the forecast becomes a bit more clear and positive. But right now it's still a bit overcast.
So leave a lot of dry powder. That's a message. Thank you, Jun.
You're welcome.
Jun Tarrobago,
Pleasure.
our investment mentor.